Welcome to another episode of Making Your Miles Count podcast. I have something very unusual, something I never expected really to do, and it is a critique on another post that is done by Ronen Gikarov. I hope I'm saying the name right. First of all, I'd like to state right off, Ronen, I'm a big fan. I appreciate what you're trying to do in the industry. I really like your podcast a great deal. You've delved a little bit into my industry, which is the accounting and tax industry. I appreciate what you're trying to do, but your podcast is a little bit off. Actually, as we'll find out, I actually did the exact same thing you've been trying to do now, probably about 8 or 9 months ago. I did a video exposing this Driver Inc. or Incorporated Drivers, and I'm going to expose a little bit of a change of my mindset a little bit in the last probably in the last about 6 months or so. There's a fair bit of things that have that changed. Maybe not lots of things, but the one or two things that have changed has made the Incorporated Driver or the Driver Inc. model something significantly different than how it's being presented. And I'd like to walk you through another side of the story. First of all, I'd like to go over the video itself that you presented and critique it. Hopefully I'm not going to be too harsh on you, but for the rest of us, I'd like to just go over step by step some of these things, and then we'll bring a conclusion in the end as to why we might end up being with a little bit more incorporated drivers in the future. Maybe not, but it is not a slam dunk answer the way it sometimes appears.
Are you ready? Because they're coming for you. All of you drivers that are misclassifying your employment status as a Driver Inc. model, this will be your fair warning. Over the last 6 months, I've had 6 transportation officers reach out to me, and they're reaching out to me because of my videos, especially these videos here. When I talk about the Driver Inc. problem, I mean, everybody's talking about the Driver Inc. problem, just nobody knows how to solve it once and for all. The problem is that we have 325,000 truck drivers here in Canada. Now, because half of Canada's population comes from Ontario, I would say that probably 162,000 truck drivers live here in Ontario. And I would probably say that 1/3 of them, so approximately 50,000 truck drivers, are misclassifying their employment status.
Okay, 50,000 incorporated drivers misclassified. I'm going to call a little bit on this. That sounds very, very high. The Driver Inc. model is actually quite concentrated, very concentrated actually, on the Asian or the Indian market. And if you take a look at some of the numbers, 26% of Ontario drivers are Asian or Indian. So that would actually mean that 100% of the Indian or Asian or Indian operators are Driver Inc. That means that there are no owner operators or lease operators. I think that's pretty high. I think even 40,000 might be even high in Ontario. Now, there might be some in British Columbia because the Indian market tends to stick together. An idea in one area moves around in other areas in Canada. That's also true, by the way, for Russian and Ukrainians. They think in a certain way. People tend to think in subcultures kind of thing. So 50,000 is a little bit high. I would probably say it's a pretty big stretch if there would be 25, 30. And as we might see, some of those numbers are actually coming down. We'll get to that in a bit.
How do I know this? Because literally 3 out of 4 drivers that are looking for a job that call here are looking to get hired on as a Driver Inc. model.
Okay, 3/4 of your experience is that the people who apply are Driver Inc. That's 75%. Okay. I'd like to know the sample size of that because and the time frame that you're looking at, that seems extremely high. I've talked to many carriers, and I kind of doubt that 75% of applicants are Driver Inc. In a market that is exposed maybe higher than normal, maybe a small sample size, maybe a small time frame, whatever it is, it seems a little bit of a stretch to me.
There are a few misconceptions about this driver Inc. model, and I hate to read about it all the time. Number one biggest misconception is that the trucking company pushes drivers to work under a driver Inc. model. Quite the opposite is true.
When it comes to the relationship between Driver Inc. and a carrier, there was historically a high cooperation between Driver Inc. And the carrier. Whether it came from a carrier's idea or whether it came from a driver idea, it's almost impossible to figure out. It is highly specialized or highly focused on the Asian market. It's almost mostly or assumed to be an Asian anomaly, so to speak. There has been, in my experience, a fair bit of carriers that have stopped using the Driver Inc. model. Actually, I was approached several times by carriers helping drivers move from incorporated drivers to employee drivers, or trying to convince them. So it's not certainly not a carrier thing. I know you did post another prior podcast about it's the drivers who are pushing it. The industry itself has spread a little bit from the Asian or Indian market, but not all that much. There is signs that it is shrinking. The Driver Inc. models is shrinking naturally.
You know what? Maybe for my next video, I'll actually do some recordings from our HR department on how many people are looking for this Driver Inc. model system. And if you don't pay them under this Driver Inc. system, then they just won't work for you. That's the case here at ET, and I'm sure it's not just the case here at ET. It's literally every single trucking company here in the GTA is suffering from the exact same thing.
Okay, let's talk about carriers suffering or not suffering. Maybe we should define what suffering is for a carrier. It's not really suffering when a carrier, all a carrier has to do is just say, no, we're not hiring Driver Inc. Then you can hang up and that's it for the conversation. It's a misrepresentation to say that carriers are suffering from this Driver Inc. model. If you don't want to hire someone, you don't have to hire anyone. They don't meet up to your standards, you don't hire them. If a driver has 30 demerits and you refuse to hire them, is the carrier suffering? Nope. The driver is simply not qualified.
But what I do know is that they're putting together a task force to work on this Driver Inc. problem. I've been hearing about it for about 3 or 4 years, and maybe it inspired me to do this video, or maybe this last officer that reached out to me inspired me to do this video. I would want nothing more than for the MTO and the CRA to crack down on this.
It's been around 3 or 4 years. I have a question, Ronen. Why would an MTO officer ask about the Driver Inc. model? They're a provincial organization or regulation. It's a little bit like your doctor asking, how often do you change the oil in your car? It's just not their business to do that. It doesn't fall under their regulation. I mean, I might be wrong on that because it's a little bit out of my area of expertise. You might be a little bit more on that. But why an MTO officer would be questioning and complaining about the Driver Inc. model, you kind of make the assumption, I assume, this is my assumption, that she didn't bring it up. Maybe you brought it up. Don't want to put words in your mouth, but it doesn't really sound like something that an MTO officer.
My life is 10 times harder because this Driver Inc. model exists. And I'm sure that a lot of trucking companies voiced their opinion about this, that their lives are much harder because the competition and the fairness and playing field between companies that are doing the right things versus companies that are doing the wrong things, the ones that are doing the wrong things are kind of getting compensated along the way. They are a lot more competitive when they go in and quote new projects, where we are at a very big disadvantage because we pay taxes, we pay payroll taxes and CPP and EI on drivers, truck drivers, where bad players in our industry are getting away. Not only are they getting away, they're a lot more competitive in our space because they are doing things the wrong way.
Okay, 10 times harder. I have no idea. If Driver Inc. is making your job 10 times harder as VP of operations, I don't think you have a very balanced view of what your job description is. It just cannot make a job 10 times harder just because a certain segment of the industry is unhireable in the standards that you state. You also made reference to things being done right versus wrong, prejudging the situation. I'll get back to this in a little bit, but I think it's a little bit of a misdirection of the facts. If you hire somebody for 50 cents per mile, the cost of CPP is 5.98%. Cost of EI is 2.324%. In Ontario, WSIB is anywhere from 1.3 to 1.5%. So that's a total of 9.574%. So that's a total of less than 4 cents per mile, 4.787 cents per mile difference between somebody who gets hired and they have to add on the CPP, like all of the taxes, and ones that don't. That does not necessarily represent a huge disparity. I know there are some drivers who are getting 42 cents per mile. I know some guys who are getting 48, 50, 56. I know one guy getting 62 cents per mile. So rate per mile, or even the amount that the person is getting paid, it varies so much that to say that a 10% variance is making the playing field unlevel, that's just, it's making a minor issue something major, and I think that's blown considerably out of proportion there. So even the net effect, you're making it a little bit of an exaggeration just from a money perspective. There's far too much other information that is missing to make an assumption that it makes that big of an impact to the bottom line of any carrier.
Can you imagine if we had another 50,000 truck drivers paying into our taxes? What would that do to my taxes? I mean, my tax bracket right now, I literally pay 49% of my salary goes to taxes.
Okay, Ronen, let's have a little bit of fun here. You say %, tax rate. That's what you're paying. There are different tax brackets in Canada. Let's just look at the federal ones. There's 15%, 20.5%, 26, 29, 33. At 33, you're making more than $235,000 per year. You're in Ontario, so it's an additional 13.16%. That's 46.16%. If you add CPP and EI, it might come to 47, 48. I'm guessing that at the very, very most, either you're adding something else in there in a deduction. Maybe there's a huge group insurance policy, or you're adding in RRSP donations or something like that. But 49%, it's a little bit out. But let's just say that you're fairly close. You're making over $250,000 a year. I'm gonna talk a little bit about your $250,000. You have a very nice channel. You serve the industry quite well. I bet you bring in anywhere from, based on your followers and your posts, anywhere from 5 to 8 new good drivers per year to the carrier that you work for. That's good drivers. Based on the contribution that 5 to 8 new good drivers can add to the bottom line of a company, you are definitely worth $250,000 a year. You may even be worth more than that. You may even also bring in, 5 to 8 not so good drivers, and then maybe 5 to 8 borderline drivers. You're worth what you're getting paid. Well done.
So I personally, on a personal level, would want nothing more than 50,000 truck drivers to pay into the taxes, proper taxes, like CPP, EU, and EI. And if they paid into it, then maybe my tax brackets would be a little bit lower, where I wouldn't have to pay so much taxes.
Whoa, sorry, Ronen. You goofed a little bit here. Maybe got a little bit excited. Are you saying the more taxes that a government collects, the lower rates that you or we all pay? How long have you lived in Canada? That's bad logic. The more money they make, the more money they spend. It's not going to lower our taxes at all if every single driver, Inc. or incorporated driver, paid twice as much tax as normal. That's not going to make any difference to your and my personal income tax bill.
Now, why do drivers do it, and why do trucking companies do it? Again, I'm not blaming everything on the drivers. There's a lot of bad players, which are the trucking companies that are hiring drivers under this Driver Inc. model.
Okay, first Ronan make the point that drivers are pushing this. Now he's saying carriers, or some are complicit with this. There is a sort of like chicken the egg, what came first with this model. But if 3/4 of his applicants are Driver Inc., then wouldn't it seem reasonable that the Driver Inc., they are leaving, or complicit carriers, because something isn't going well for them? Wouldn't that make the assumption that the Driver Inc. model is actually not sustainable? There's something wrong with it. If 3/4 of your applicants are Driver Inc., that means wherever they were working before, they're not happy. I don't think carriers are nearly as complicit before, and I think carriers are shutting things down, and it could very well be that drivers who like the Driver Inc. model are trying to find carriers to work for. And if they can't find them, they are either start their own ring rights, or they do something that they have to go to it. So it's a matter of supply and demand. If nobody's going to be hiring them, if all of the carriers, all they do is say, no, we're not doing it, this whole Driver Inc. model is going to naturally just crush itself down and become no more.
And obviously the goal of this video is to try to explain to those that keep reaching out to me, or these MTO officers, or these law enforcement, how to finally crack down on Driver Inc. model.
Okay, cracking down on the Driver Inc. model, like I was saying just a couple of seconds ago here, if 3/4 of your applicants are applying, I don't know if there's any more need to crack down. It's because the crackdown seems to be working. There's less and less opportunity. That means they're coming, and they're stuck. It's just a matter of time before they're going to have to go somewhere. And if nobody else is hiring that is approved to be Driver Inc., of course, it's going to shrink. I think the pressure seems to be working.
So how does the Driver Inc. model work? Well, it's very simple. You treat a company driver as if he is self-employed. It helps both the company and the driver, where the company doesn't pay their share of taxes to the driver, and the driver doesn't pay taxes until the end of the year. Now, in most cases that I am familiar with, a lot of the drivers get away with not paying their fair share of taxes at the end of the year, because if they work under their corporation, then they start expensing a lot of the things that a driver should not be able to expense. I mean, yes, you can expense a phone, and yes, you can expense, your meals and lodging if you're on payroll, and you would get a credit back. But when you're on the Driver Inc. model, the driver doesn't pay until the end of the year and does not pay his fair share of the CPP, EU, and EI. And also he has the ability to pay himself whatever he wants and leave the rest of the money within the corporation. Okay, so a lot of expenses they can deduct within their corporation before they get paid, and there's a big difference between the money that he pays himself versus what he can leave in his corporation. Now multiply that by thousands of drivers that are doing this. Actually, it's tens of thousands of drivers that are doing this. Well, guess what? Canada is shit out of luck, because a lot of people are not paying taxes, and that's why they constantly want to crack down on this.
Okay, can carriers hire for less using the Driver Inc. model? In theory, yes, but like I stated before, hate to be the Department of Redundancy, but that is a relative term, and it's a lot of supply and demand, and there's other factors that are way more important than the approximately 10% of the payroll aspect of it. It's just not a huge factor that's applied to it. Now, there's one point that Ronen, you made that has to be taken into consideration here. Somebody who uses Driver Inc., if they pull out wages from their corporation, they do have to pay Canada Pension Plan. And when they do that, they have to pay both the employer and the employee portion. So they're actually double paying their CPP. That's one of the disadvantages of using it. And a lot of Driver Inc. people who are using that model, either they don't think about that added cost, or they're using a different system that eliminates that completely. We'll get to that in a little bit.
But why do they fail constantly? I mean, I've been hearing this and I've been reading articles about this literally for about 6 or 7 years now.
Okay, the Driver Inc. model being a scam for 3 or 4 or 6 or 7 years, I didn't go back in my records to see how far back it's gone, but I believe that actually for the most part, it's the media that, and the media being whether it's articles that are written, even using myself as a sounding board saying that it is a scam. I think it's promoted primarily by us. If we wouldn't say anything, then it would be basically the Ontario Trucking Association and the Canadian Trucking Alliance. They're the ones who are actually making it sound like a scam. There are definitely risks to it. I'm not saying that it isn't, but I wouldn't necessarily put it as a scam. And if you wait to the end of this video, I'll explain why I don't necessarily believe that it's a scam.
Now, I did a video back in 2020, I did another video back in 2022, and now it's 2024, and I'm still hearing about this, and they haven't been able to crack down on it. So let me make your life even easier and help you crack down on this Driver Inc. model, because my life will be 10 times easier if you crack down on it. So let's get a move and let's start cracking down on it.
Okay. Let's go back and say this over again. I do not believe that it's going to make your life 10 times easier if Driver Inc. disappeared and everybody cracked down on it. But even still, let's remember the goal in driving truck is not to make your life or the carrier easier. Let's make it even your life. It doesn't, your life being 10 times harder than what it is, that's really irrelevant to the argument. The argument is there benefits to the Driver Inc. model, and should it be around? That's maybe the real question that should be asked. We'll get to that shortly.
So, number one, how do we stop this Driver Inc. from continuing? CRA and MTO need to get their heads together, sit under one table, and understand that one cannot do it without the other.
Okay, the 8 rules to stop Driver Inc. Well, let's make this clear. These are your ideas to make your life easier if we all did your rules. If the goal in the driver's life is to make your life, Ronen, easier, then listen up.
CRA cannot take this project on its own without the MTO, and the MTO cannot take on this project on its own without the CRA.
Okay, the MTO and CRA, provincial jurisdiction and federal jurisdiction. CRA does not need the MTO to crack down on Driver Inc. if they wanted to really crack down on this issue. This is a CRA issue. It is not an MTO issue. It is an income tax issue.
And I'll give you some examples. The MTO knows exactly which driver was at which location when they get pulled over, either by the scales or at a customs, or if they cross the border.
Are you saying an MTO officer has immediate direct information on the driver's personal employment records? What if the driver has a corporation from another province? Does the MTO have any incentive to save Canada pension, EI, federal income tax? Nope. Do they need to cooperate? No, they do not. There is no incentive for a provincial organization to minimize a federal institution like Canada Pension Plan or EI under Canada Revenue Agency's jurisdiction. So the two is very, very separate. Like I said, oil and water.
They know a person's name, okay? And that name, they can start digging. They know the person's name. They know at what time and where they were and which truck they were sitting at, okay? So that's exactly what you need in order to crack down on it.
MTO knowing the name of the driver is irrelevant. You need to know payroll records. You need to know social insurance numbers. You need to do all sorts of things. Do they have access to the driver's T1? No. This is not an MTO issue. It is a CRA issue only.
Now, you ain't gonna crack down on it without CRA, because you need to go back to CRA and ask this person's line 150. Okay, so if you had Mr. Mike Smith in Windsor, Ontario on this and this day, you would be able to go to CRA and get their line 150 from CRA. Now you can tell if this guy is a driver inc or not a driver inc based on their line 150, and you're never going to be able to do that without CRA, and CRA is never going to be able to do that without the MTO. So understand rule number one: you cannot take on this project without both of you sitting at the table.
Can you see where he's going with this? Can you see where he's going wrong? What he is asking for is a complete audit of every driver going through MTO fingers. Are you kidding me? First of all, CRA has way more access to information, 100 times faster than anything an MTO officer could offer them. CRA, click, click, click. Who filed a TL2 simplified method last year? Click, click, click. 90% of all drivers, maybe not city, but they have it immediately at their fingertips. MTO, they don't have time to do all of that. They are far too busy checking to see whether trucks have speed limiters to level the playing field. I hate to bring that up in this argument, but I'm just playing with you. This is not an MTO issue, and trying to get MTO and CRA together to do this is a gross waste of MTO time and effort. It's not their jurisdiction. This is a CRA jurisdiction only.
That was actually point number one and point number two. Point number three is you are going to do all this at the MTO audit. Why the MTO audit? Because in an MTO audit, the standard letter that goes out to a carrier is you need to have the following prepared. You need to have all the bills of ladings. You need to have these 25 drivers with their logbooks. You need to have access to safety records. You need to have access to payroll records. You need to have access to the following, all your tolls for your trucks. They actually come out and they are prepared. The CRA has absolutely no clue what a trucking company does. The MTO officers that are doing audits, they are actually very smart.
Oh my goodness, Ronen, did you just say that an MTO is smart and the Canada Revenue Agency is not smart? Oh boy, I'm sorry, Ronen. I think you grossly overstated something there. You're trying to bring together two completely differently aligned government agencies and trying to put force in an area that the MTO is not aligned in that way. Canada Revenue Agency, as we'll get, may not even align itself in that specific direction. Possibly, but we'll get to that in a bit.
And they know what these trucking companies are getting away with and what they're not getting away with. That is a perfect time to ask for the payroll records of the drivers that got pulled over at scales and scale houses. They have exact times, they have exact locations, and they have driver names, and they have driver license numbers.
Okay, all the information an MTO officer gets is irrelevant except for one thing. Like when they get scales, customs, the names of drivers, deliveries, etc., it's all irrelevant. The only thing that they handle that is actually under federal law is the ELD or the log sheets, and their only responsibility is to make sure that it's done within the parameters that are set for that. Whether that log sheet expresses that they are a driver inc or whether they are an employee, that's not directly linked in there, unless you are asking for the MTO to demand that the carrier list the status on that. That's just unbelievable on a paperwork for no real benefit other than to bring two government agencies, federal and provincial, together to combat a discrepancy in the income tax application that may or may not be applicable to lost income tax. I don't know if there's necessarily lost income tax, but the only thing that's really at bay here is other government agencies like Canada Pension Plan, or departments, should I say, Canada Pension Plan, EI, sometimes workers' compensation, and other small agencies and the like. That's the only thing really that is being compared between a carrier that allows driver inc and the carrier that does not. But once again, payroll is a federal income tax filing, is not under the MTO jurisdiction.
Rule number 4, do not believe or take on face value the documents that you receive. All documents can be altered. All documents can be falsified these days. With a click of a button, I can change any PDF file into a Word document, change a 0 to a 2, change a 2 to a 4, and do whatever you want with digits and numbers, okay? So do not believe every document that you see. Which means that if you're asking for the payroll records, make sure you are also asking for bank statements. Make sure you're looking at the transactions, okay? So you see who it's going out to, the outbound wires go to. It's very simple to bust this kind of operation. You just need to be properly guided to do it.
I think Ronen is training MTO officers how to do a CRA audit. Falsifying records for payroll. Why would an MTO go through all of that work on behalf of CRA? This is easy. What you're asking for is unbelievably difficult, if not impossible to do. Never mind that they don't have time to do it. Is an MTO officer able to ask for personal income tax information? Or would they need a court order in order to do that? This is an extreme request that he's making. Again, why should an MTO officer care how much a driver gets paid? How he gets paid, if he gets paid. It's not under the MTO's responsibility to do that. They might be concerned for driver inc. Who knows? But the amount of audit that it takes, amount of work that it takes, that is, what you're asking for is unbelievably intrusive in an MTO with their responsibility. Maybe some MTO officer would relish the authority to be able to go into a driver's personal income tax and see how much they get paid, if they get paid, when they get paid, all this. But that is unbelievably out of their jurisdiction. I am sorry, Ronen, this is way in left field here.
All right, so you take those figures, you match it with the line 150. You need CRA because CRA is going to show you who gets paid how. So if there's a company driver and all of a sudden he's a truck driver and you're seeing that his line 150 is only $30,000, $40,000, but the transfers to the banks are much higher, there is a discrepancy, and most likely the payable is not to John Smith, it's going to 2277 Ontario Inc. or Canada Inc. Simple stuff. You need the C and the MTO.
Yeah, Ronen, that's not how to audit an incorporated driver. CRA auditors are actually a little embarrassed for you right now because that's not how they perform their job. They have all the information, pretty much all of the information, to be able to track down on 80 to 90% of all driver inc. If they really wanted to do so. They do not need the MTO or any provincial cooperation in order to do it. I'm sorry, it's not even a good idea. It's a roundabout way to waste an awful lot of time and energy.
Number 6, I would really appreciate it if you stop wasting my tax dollars and get your shit together, both the CRA and the MTO, and start cracking down on this, because I don't want to be here in 2026 doing another video on how to crack down on driver inc models. Number 7, when you are putting together a task force, okay, please include people within our industry, not just officers. You need owners of trucking companies that really want you to be successful.
Okay, Ronen, time out. Are you asking for a lobby group or private individuals to have tax audit authority? Are you asking CRA to forfeit their authority for you or another representative? Is it that easy for carriers to take over government authority? Just ask for it or demand it? That's like deputizing a carrier owner to police their own competition. That is outrageous, and I'm sorry. Back that puppy up. have the go beep, 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 because that is not going to happen. At least not in a democratic society. Maybe if some organizations start taking over the government, but we're talking some sort of quasi-capitalistic communism kind of thing. That's not going to happen. Please let CRA do their job if they decide to do it.
Because the owners of trucking companies, large mega carriers, smaller carriers, very small carriers, they are going to teach you properly how to bust down on this. You just need to stumble upon the right people. And number 8, you can put CRA and you can put the MTO together at one location, coming up with all 7 rules. But if you don't follow rule number 8, and if you don't tighten down on your rules, you're not gonna get anywhere. People in Canada know that they can get away with almost anything. And rule number 8 is you need to get tougher with your rules.
He's made the assumptions that the rules that he's talking about, his 8 rules, are fully decided. He is lobbying CRA to do what he wants, or some sector of the industry what they want done. He is asking CRA to do it how he wants it done. That's really, it's beyond bold. It's actually a little bit arrogant at this point. I don't think it helps his credibility to ask a government agency to do something like that. As you'll see at the conclusion, let things continue the way they are right now, and the ball is rolling in a particular direction. So let's see the true conclusion of this.
You need to be able to pull plates off and have the legal right to pull plates off. Just like when an MTO officer does a level 3 inspection. Now, if those brakes are out of adjustments, he puts them out of service. And if those tire cords are showing, he puts them out of service. The same thing needs to happen here. The MTO officers need to be able to revoke plates for anybody who does not comply with this Driver Inc. model.
Okay, so MTA pulls plates because of an income tax issue under federal jurisdiction? Yeah, wishful thinking, not going to happen, probably. There's too many people whose toes would be stepped on for that from a governmental perspective.
And with this going out to the public, and once you guys start busting people, and once you start posting it and showing what happens to trucking companies that don't comply with this driver and this expulsion of the Driver Inc. model, nobody will be able to do anything. You have to get the public to know what's happening, that you guys are serious, that you guys are cracking down on it, that you guys are putting together a task force. I see that you're putting together a task force because I'm getting emailed constantly from this task force, or people applying to this task force, and they want information on this Driver Inc. model. So I've laid it all out here in this video for you, and I wish you nothing but the success in order to crack down on this Driver Inc. model, because you will be making my life a lot easier. Now, if you are an officer, you're part of a task force, or you're trying to crack down on it, feel free to reach out to me, to sponsorship@ettransport.ca, and I'll be more than happy to share with you my opinions. I'm Ronen, and I'll catch you in my next video.
Okay, let's go over a few things now that the video is over. First of all, step by step, Ronen's opinion is actually worth 0. The MTO's opinion is actually worth 0. The Ontario Trucking Association's opinion about Driver Inc. is worth 0. Canadian Trucking Association, their opinion is worth 0. And guess what? My opinion is worth 0. Now, CRA's opinion is worth something, but certainly not everything. CRA has given out opinions before, and they are sometimes of little to no value in court. And sometimes their opinions in one area of Canada is completely different than in other areas. For instance, the TL2 simplified method for a self-employed individual is disallowed in one area of Canada, and auditors train drivers how to fill it out in another. I have another case that just came through our office about a month or a month and a half ago, where an auditor audited a carrier. They talked to an owner-operator, And the auditor stated in their ruling that the owner-operator who owned a truck was classified as an employee and therefore must pay Canada Pension and EI, like the carrier had to pay the CPP and EI through a T4A. That case, we argued with the auditor, and it went to the supervisor, and we said, listen, this guy is an owner-operator, he's an interliner. Look up the word interliner in your forms, and you will find that they are, number one, they're zero rated for GST, but they're also independent operators and are not classified as employees. Please look that up. They looked it up, apparently. At least that's what I was told. And the auditor says, no, we're sticking by our opinion that this owner-operator who owned a truck, he's one of our clients, is in fact an employee, and the carrier must pay Canada Pension and EI. Well, we appealed the case, and right now it's actually in the middle of being appealed. This is exactly opposite, or almost a little bit opposite, of the Driver Inc. model. And it's actually horrendously against carriers. We didn't have to file a notice of objection to this. Not a notice of objection, an appeal of this, sorry. We didn't have to file an appeal, but we knew the financial impact of it. Imagine carriers all across Canada who have owner-operators, and instead of just giving them their contract rate, now have to give CPP and EI to that, as well as their contract rate. That was the opinion of an auditor at CRA. If somebody wants to know that case, I can give them that case number. But Canada Revenue Agency's opinion on something is sometimes irrelevant to the argument. So whose opinion is the true opinion? Ultimately, it is the opinion that matters in the tax court. What is the tax court going to say about Driver Inc.? And sometimes the first level tax court is going to say something, and then the appeals. And then ultimately it could go to the Supreme Court of Canada, because they actually have the final say. At least that's what I understand it in this. I think they could take over this case, but I'll get to that in just a minute. But I do want to go over, there are five or six major issues about being driver incorporated, or incorporated driver, or Driver Inc. What does the Driver Inc. model actually provide the driver? Does it actually provide them a benefit of 10%? Well, first of all, there's no Canada Pension Plan because it's just a contracted price, which is both true and untrue. It's true the carrier doesn't pay their portion of the CPP, but the Driver Inc., or the incorporated driver, has to pay both the employer and the employee portion of that Canada Pension Plan. And so it's against the Driver Inc. person to actually utilize the model. There is no EI costs under the Driver Inc. model, so they do save that. However, the benefits of EI, if there is any, is not available for them as well. It's interesting to understand that both CPP and EI are contributory programs. If you contribute to them, you get the benefit. If you don't contribute to them, you don't get the benefit. The Driver Inc. individuals who are using that model are not arguing that they want CPP and EI, even though they don't contribute to it. That's not the argument. The argument is they don't want to contribute to CPP or EI, and they don't want the benefits either, so they just don't want anything to do with the government utilizing their finances. They have logically put in their mind, what is the return on the investment that is sent to the government for CPP or EI? A truck driver sometimes can't even collect EI because of driver shortages and the like. I've seen that happen where individuals get laid off and they actually can't, because the driver behind the EI person behind the desk says, you're a truck driver, you can get a job anywhere you're at all, your benefits are denied. That's happened a few times that I've seen. So if you have to contribute to it and you possibility of not getting it, should we not have the option of opting out of EI? Should we not have the option of opting out of CPP if we don't want the government to manage our retirement? Those are legitimate questions that maybe a tax court or maybe even the Supreme Court would have to decide. Who is responsible for workers' compensation, or WCIB, in Ontario, for instance? What happens if you get injured? Well, if a person doesn't contribute to WCIB, they don't get any benefit if they get hurt. Well, it's no difference than having a house paid for and not having fire insurance. Not having fire insurance is a personal choice. So if a person chooses not to have disability or injury insurance, are they somehow going to complain that they don't get benefits if they've never paid into it? These are not issues that are, they're presented very much by the government as mandatory, you have to. But in Canada, we have choices on how to present ourselves for taxation. Now, we'll get back to that in just a second. There's another thing that Driver Inc. forgoes or fails to get access to, and that is labor board protection. If a Driver Inc. damages a carrier's truck as an incorporated driver, they no longer have access to the labor board protection. It becomes a civil issue between one corporation and another corporation. That is a completely different issue. Now you are in a civil dispute, and if you damage something, more than likely you have to pay for it, if that was under a contract. Labor board is completely different. As an employee, you can damage all the bumpers you want, and the labor board will say, well, he was an employee, he doesn't have to do it. The most you can possibly do is fire the individual. You don't get your money back from any of the damages that they do. So that is something that a Driver Inc. has to forego. But if they say, hey, you know what, I'm going to be responsible and I'm not going to damage anything, and if I do damage anything, I'm going to pay for it. Maybe that's what their perspective is. Shouldn't they have the right to have that position? We'll see what maybe the courts say on that. But there are other things like provisions such as holiday pay, maternity, paternity benefits, that kind of thing. They forego in a Driver Inc. model that an employee automatically is assigned. There are other things, though, that counter this, that I've heard arguments from Driver Inc. individuals that they like to take off 1 to 2 months off of a year. And some of them, especially in the Indian market, they fly back to India for December and January and go to a bunch of weddings in India, which is great events, by the way. But if you were an employee, you may lose your position, you may lose something. If the employer has standards and says, no, we're not going to give you 1 or 2 months off every year, then they have no choice. But if they're truly self-employed and they can take off, December and January, there's nothing that anybody else can say about it. They come back and they start over either at a different company or back at the same company again. To some degree, it gives a driver a level of autonomy that they otherwise would not have under the protections of everything from the labor board to standards, worker standards, and employer-employee standards and stuff like that. So, what is the purpose? And let's go back a little bit to CPP and EI, and even to a certain extent WCIB, and what is the purpose of these agencies? It is to protect those citizens who do not or possibly cannot protect themselves. CPP was basically brought into Canadian taxation, though it's not really a tax, because the government made the assumption, rightfully so maybe, that the average citizen does not have the forethought to save for retirement. That's what their thought is. So they came up with this plan that it's mandatory for an employer to put away half of what the employee does, and they work this formula through. The same way with EI. EI insurance, employment insurance, is the government basically said, hey, wait a minute, what if somebody gets laid off? And if an employee doesn't invest in themselves in such a way to advance in their business and produce a value so that when something does come negative their way, that they get laid off, that they're not standing around being unhireable in other situations. So EI, there's an argument for it, but in order for the select few to be able to utilize EI, the vast majority of people have to mandatorily contribute to it, to a system that supports people who otherwise do not reinvest in themselves and to become more employable in their occupation. So there's a responsibility for advancing your own hireability that the government is trying to say, okay, well, these people really, all they want to do is work 9 to 5 and party on the weekend, and they don't want to reinvest in their own career. And if they get laid off, well, we're going to get blamed for it, so we might as well give them EI, something like that. Whatever the logical argument was when they first brought in these things. Same as WCIB or workers' compensation. If you make it mandatory to buy insurance, which that's what WCIB is employment insurance. When you're at a job and you get disabled for whatever reason, you get compensation. But it has to be mandatory because that's the only way to make that a project feasible, is that everybody who successfully works without an accident pays for those who get into an accident or have disability. In some regards, if you really look into workers' compensation or WCIB, individuals who buy disability insurance, there's a lot of highway tractors, like owner-operators who have their own highway tractors who get disability insurance because it will pay for their truck while they're driving or if they get injured or so. That's one kind of insurance. But when it really comes down to it, to have your truck paid for by one insurance policy and your wages paid for by another insurance policy, the wages are paid for by a government agency and not by an independent insurance broker. And there's actually, you can have pretty good discussion as to the benefits of an independent insurance broker versus a government insurance broker with giving benefits from there. So it does produce some sort of a benefit for people who can't protect themselves. There is benefit to it. I'm not saying that there's not, but there are some individuals who would rather forego paying for insurance that they feel that for whatever reason they can cover their own risks for it. It's really, maybe they deem themselves to be far too, they're not going to get injured nearly as much as what their insurance premium is paying for it. And there's not a balance there. But it is a voluntary situation for insurance. Most Driver Inc. actually do have WCIB, to my understanding. There is a way in which, from a WCIB perspective, to solve this just for this one program. And that is for every province in Canada to adopt what Manitoba has done. And the rule is very simple in Manitoba. He who owns the running rights pays for workers' compensation or WCIB. All other carriers in Canada have to respect, it's called reciprocity, has to respect Manitoba's rules, which means that if a driver or even an owner-operator from Manitoba gets signs on to a carrier that's in Ontario, and Ontario says, hey, you got to get your own WCIB. And the person from Manitoba, they would actually say, okay, I'll call up Manitoba workers' compensation. They call them up and they say, okay, you're an owner-operator? Yes. You don't have the running rights? No, I don't. Then it says, we will not open a workers' compensation or WCIB account for you because you do not own the running rights. That's the responsibility of the carrier, and in this illustration, it's from Ontario. And the carrier in Ontario is forced by law to cover it, which means that if the carrier in Ontario pays the WCB and deducts it off of the independent operator's check, at the end of the contract, the guy says, okay, I'm going to move to another carrier or something like that. All he has to do is call up Manitoba Workers' Compensation or WCIB, produce all of the pay statements from the Ontario carrier, and say, listen, this is all of the Workers' Compensation or WCIB that they've taken off of my paycheck for the last 1, 2, 3, 5, 10 years, and Workers' Compensation in Manitoba will force the Ontario Corporation to refund all of that person's WCIB. That is the extent of the WCIB or Workers' Compensation ruling. Manitoba is the only province to have that, and I don't understand why every single province in Canada wouldn't do that have the exact same. From a WCIB or Workers' Compensation perspective, instead of collecting from 50, 80 or more operators, you only have to collect from one. It's way easier for them to collect from one than a whole bunch of different ones, and have this bounce and that bounce, and now have to have a receivable trying to collect from this and canceling that policy, and when are they insured and when are they not insured. No, just have he who owns the running rights pays the workers' compensation. That would solve that whole issue independently, and it should probably, in my opinion, be done like that, because reciprocity, that's what is happening anyway. And there's a lot of carriers from other provinces in Canada who, they start up new carriers and they don't know this rule of Manitoba, and they hire on an operator from Manitoba, and I have to explain the rulings to them, because, hey, you've been taking off workers' compensation or WCIB off of this guy's check, and you can't do that. And he said, oh, yeah, everybody has to have the WCIB. It's the law, it's the law. No, the law in Manitoba says he who owns the running rights pays for WCIB. The carrier then has to stop taking that WCIB. When it comes to carrier contracts across Canada, that's one thing that you notice. Very large carriers, like national carriers, they all say in their contracts, we pay for workers' compensation or WCIB, because they know of this rule. And they say it's included in your contract. Well, it's included in your contract because of law, not because you're generous. But some carriers, like I said, some carriers don't know the law, so they try and get other people to do it. But that's a separate issue that has to do with specifically workers' compensation. Getting back to the argument of Driver Inc. What if you're the kind of person who protects themselves? What if you're the kind of person who wants to save for your own retirement rather than Canada Pension Plan? You want to protect your employment status better than EI ever could. In 2023 was the first year that Canada Pension Plan tipped the scales so that it is more of a tax than an actual pension plan. Especially if you are, for instance, a lease owner-operator. If you're an owner-operator, you own your own truck, and you pay both the employer and the employee portions. And if you're close to retirement, if you're anything over 55 and you're getting close to retirement, the additional CPP that you're paying every year, the return on your investment is actually negative. So why would you contribute to something that you're getting negative money back for your retirement? Wouldn't it be better that you just keep all of that Canada Pension Plan for yourself and invest it in TFSAs or whatever it is, and actually get to keep what you save plus also get a return on that investment? 2023 was a banner year for Canada Pension Plan. It was the first year, for instance, that I stopped contributing to CPP. I don't get paid, for instance, a wage anymore. Halfway through 2023, I stopped my salary and I went completely onto dividends. I can do that. I have various corporations, And actually, lease owner operators, if you're close to retirement, and I can't understate this, every single person who is a lease owner operator has to be personally evaluated for this, because the contributions that you make to CPP and how close you are to your retirement have a factor in it to see whether it's beneficial or not. And it's not a huge tsunami, yes, go ahead and stop doing CPP. It does tip it so that you don't get nearly as much of a benefit. Actually, that you start getting into the negative benefit if you pay both the employer and the employee portions, which a lease owner operator does. They pay both. In their corporation, they pay for it, and themselves personally pay for it. So if they view it all to be their money, they're paying both the employer and the employee portion. If you look at CPP and you're close to retirement and you say, hey, if I contribute to CPP, I get a negative return on my investment. Let's figure out something else other than contributing to this mandatory contribution system. I use dividends. Like I said, not everybody should do it, and it doesn't make a huge difference, but it does. It can. You may have to bump off your retirement a little bit, and like for instance, I don't plan on retiring until I'm 70 or over 70, so it makes sense for me to take 10 years of my life and work a different plan that I did prior to 60. So each one to their own factor, but it is a voluntary plan, so to speak. A little bit with the EI as well. If you are self-employed, you are actually EI exempt if you're a lease owner operator. Now, Driver Inc., that's where the issue becomes a little bit of a problem, because the courts have to decide whether a person has the voluntary ability to define work going through a corporation as being in a different tax status than an employee. Can a corporation contract with a person under a corporation? Those are issues that, in my opinion, they actually have to be decided by the courts in that regards. Now, there's one major issue that I'd like to go over. Why CRA will not audit incorporated drivers? This is a little bit of a longer story. You have to put it into context. For instance, and we got to go back to 1992, believe it or not. That is the year that Canada initiated GST and eventually HST as well. That was the implementation year. It created a huge demand within Canada Revenue Agency to hire new people. So they went through this thing to expand Canada Revenue Agency, because in order to do all the audits in the management of goods and service tax. 29 years later, COVID shut down the government shut down businesses and provided things like CERB, temporary wage benefits, emergency wage benefits, CEBA, a whole bunch of COVID-related financial incentives, disbursements, whatever you want to call it. Our firm has been doing audits for 30 years, 30 years. So we have regular audits going through all of our clients, well over 500 operators at any given time. And so we know an awful lot of auditors coast to coast. We have clients Prince Edward to Vancouver Island. And so we got a fair understanding of different districts all across Canada. When COVID came in, Ottawa required Canada Revenue Agency to oversee all of these new platforms and programs. CRA was just barely holding on with their fingernails the workload that they had at that time. And then suddenly they closed down and everybody had to work from home, so their productivity went down. And their workload increased, and it was basically a tsunami of responsibility in 2021. So all of those individuals that were hired in 1992, they're at 30 years, and they looked at this and they said, forget this, I'm retiring, I got my years in, and they took their retirement benefit. Now some only took 25, some took 20 years, but there was a huge amount of people who just left CRA because the jobs became way overwhelming. I was talking to one auditor who said, look, I've been here for 30 years, and I told them right off the bat that I'm not doing anything to do with this COVID stuff. I have my expertise in this and this and this area, and that's it. That's all I'm doing. 2 weeks later, we were talking, and he said, no, I'm quitting. He says, they forced me to do this, so I don't have to. I got my time in. I got my retirement. I'm out of here. They lost a huge amount of employees. Not only did they lose employees, they also lost productivity. And so they were having this, it's more than a slow motion car wreck. It was a grinding halt because their productivity went down and they lost individuals. Well, then they went on strike for a while, and they said, well, okay, we gotta hire a whole bunch of things because there's restrictions that we have. We can't do all of this. And they actually, in my opinion, this is probably the only time I would ever side with Canada Revenue Agency on a strike, but they deserved it, and because they can't do the workload that was due. I'm not here to defend Canada Revenue Agency, but I do know that CRA was given responsibilities that they should never have been able to, they should never have been given in the first place. They ended up hiring a whole bunch of new people, and they had to raise their rates because who wants to go into an almost toxic environment? And our evaluation of Canada Revenue Agency since 2022, 2023, when they opened everything all up, the vast majority of all auditors you will ever talk to, they're working from home. They're still working from home. And they may always work from home. We don't know. But the sheer volume of audits, like I said, we have about exposure to 500 audits, and we have regular audits going on all the time. And I can have a fair, good sense as to how many audits are out there as a perspective. I would say the sheer volume of audits has actually dropped by about 40%, maybe 50%, and it might vary quite a bit from different jurisdictions around Canada. So from a pure productivity perspective, CRA is operating at 50-60% of what they used to. And so now if you're talking, okay, Canada Revenue Agency, now you go over there and go audit this Driver Inc. thing. They are so freaking understaffed, it is ridiculous. I did a small sampling of the existing audits that we were in. Of the 10, I only knew of 1 or 2 of them had the personal authority to complete and satisfy the audit independently, which means all the rest of them were being supervised. That means that the entire CRA organization, if it's extrapolated all across Canada, they all got green people there, and they're just barely holding on. And in my opinion, they are actually quite good at what they're doing. They're pretty fair, but they are operating at 50% of what they were before. They're still very nice people. I don't believe in people trashing CRA, because they're the vast majority of all the people at CRA, they're just doing their job. They want to do their job and go home and to their family. Actually, they start at home. But anyway, you know what I mean. The other factor on top of the understaff for this is the low return on investment when it comes to correcting Driver Inc. or incorporated drivers. The 10% savings on payroll doesn't represent any type of significant benefit for them. The only thing that they may get from it is Canada Pension and Income Tax. Now, if there is fraud in the Driver Inc., where they are, not paying anything at all in taxes, including corporate taxes like dividends, that is a different factor. You don't actually need to be Driver Inc. in order to lie on your taxes. It's irrelevant to that. I say the majority of people who are doing incorporated drivers or Driver Inc., they are choosing a route that produces the least amount of exposure to any type of government taxation. So I'm assuming majority of them would be doing some form of dividends or a majority dividends, and their exposure to Canada Pension and EI is extremely low. And income tax, that is, you have a lot more freedom to do that under a corporation than you do, say, as a self-employed individual. It's hard for CRA to argue against some of the tactics. If Driver Inc. is allowed, then everything else to reduce your taxes will also be allowed. There's not a very high ROI to CRA for Driver Inc. If 30 to 50,000 identical filers are not easy to administer, even if they wanted to, if they are severely understaffed, how do you audit 30 to 50,000 incorporated drivers? Now you can, choose 20 of them and make an example of them or something like that. But realistically, there is another added feature to the Driver Inc. Debate that has very significantly changed this argument. It is not an argument that Canadian Trucking Alliance and Canada Revenue Agency, that they're not supposed to be holding hands or so. The Driver Inc. model is not alone. The Driver Inc. is not fighting against Canadian Trucking Alliance alone, because there is now what's called the Canadian Truck Operators Association. It's a new association that is defending the issue of incorporated drivers. What this new added feature to this argument does is it creates an extremely large lobby group on behalf of these 30 or 50,000 identical filers. It then moves the argument of being free from governmental programs out of individual fighting and into the actual debate politically. So this is not necessarily a tax argument. It is now, because of the sheer size and volume of it and the backing of the Canadian Truck Operators Association, it is not a tax issue, it is a political issue. If you got that volume behind you, Canada Revenue Agency, just by sheer volume, is going to back off on it. Because Canada Revenue Agency is filled with, they may not like the term, but it's bureaucrats. They are there to administer the law. At some point, when there is an issue that is really big, they defer to the governing body. They defer to the political offices, and the political offices says yes or no. And so they would ask their body, because they do not want to put their job on the line just because of an interpretation that they may or may not have on the law. The bigger the political issue, the less Canada Revenue Agency actually wants to push it through the courts in an aggressive, combating format. They would like this issue to be solved without their hands being dirty. That's my argument. That's what I believe the future of the Driver Inc. issue, that's where it's headed towards. And there are a few organizations that are absolutely hating me saying this. That is the Ontario Trucking Association and Canadian Trucking Alliance. But realistically, this is a political issue that has to go through, because there's such a great volume and because they no longer have the power. They're not an independent lobby group. The Canadian Trucking Alliance basically was the only lobbying group to political parties. Now suddenly you have the Canadian Truck Operators Association. Now some elected official has to listen to two voices on one opinion. And the question is, who's going to be the prevailing voice? Sometimes that has nothing to do with even the law. It's not going to be up to the tax court. It could very well be something that's just going to be allowed and nobody says nothing about it. It's either going to trickle down into nothing, or it's going to slowly be allowed for everybody to do it. But imagine, if you will, the trucking industry or employment all across Canada to suddenly say, listen, every individual now has the right to opt out of Canada Pension Plan or EI if they want to, or they don't want to. There are government officials who would think that would be absolutely impossible to foresee a country run like that. But realistically, there are many countries that run like that. And I would like to give a little bit of a shout out to the Indian market. I'm actually a big fan. Actually, in January of 2023, a very good friend of mine and I went to a wedding in India, and we toured Delhi, we toured other areas. We went to a wedding of one of my office managers. Great time. I'm just unbelievably impressed with Indian weddings. It was a 5-day wedding. We here in North America condense things to such a degree that we can get somebody married in 20 minutes when somebody in India, it'd take them 5 days. And just because you do something really quick doesn't necessarily mean that it's good. You sometimes miss the entire point of it. But anyway, that's a rabbit trail. I appreciate the Indian culture. The vast majority of people in India do not directly rely on the government for their retirement, for their unemployment status. They have to hustle. And that is built in the culture of India. If you don't work, you don't eat. And that, I respect that. It's a great cultural heritage to have. Then move from India, you come to Canada, and you see a government that says, oh, it's all right. You don't have to worry about eating. We'll take care of you. Really? Do you want to be a ward of the state? Do you want the government to just wait for a week or two and you get a check, and wait for a week or two and get a check? If you have any pride in your life, you want to contribute to your own success in life. And this is supposed to be the land of opportunity. When the government disincentivizes an entire culture, and you move from a free society to a much more restricted, governed society, I can see how people chafe at that and say, wait a minute, get off my property. That kind of redneck kind of an attitude for that. I understand the Canadian desire to that Canada pension plan, we're looking after our own people kind of a thing, but everything has a cost. Just because you have the ability to give somebody a Canada pension plan, is it really the best thing for everybody under all society, under every rule? That is a debate that really has to maybe be reevaluated. We may not be able to necessarily afford a Canada pension for the future. They're already saying, for instance, Canada pension plan, if we don't have a certain amount of immigration and young people paying into it, getting close to retirement, the young people aren't paying it. And so it's going to go bankrupt. And there's some real risk. And it's primarily because the government has really not done a very good job at managing our retirement money. Now, believe it or not, Canada Pension Plan does have a pretty good ROI as a mutual fund, if you classify that as a mutual fund. I'm not saying that they get, their investments, don't get 1 or 2%. They actually get respectable 8, 9, sometimes 10% on their investments. But as a recipient of the benefits of Canada Pension Plan, I get 1, 2%. The primary benefit probably of CPP, in my opinion, is that if I would be put in a state of bankruptcy, it does not affect my Canada Pension Plan. That's the only real benefit. It is a safety net. It's something that survives a bankruptcy. But it's not a huge moneymaker for anybody. I mean, talk to people who are retiring. Are they lining up and saying, boy, I'm living the life of a king here on CPP? Not happening. It's a horrible return on your investment. The only thing that makes it kind of moderate is your employer has paid for half of it. And then it's kind of okay. But if you are self-employed, owning your own truck, for instance, or it's a horrible investment, because if you have to pay both the employer and the employee, it is not what it was in the 70s and 80s and 90s. Not even the 90s anymore, but 70s and 80s for sure. So the real question is, all of these government-run programs, that's the issue. Does a citizen have the right to remove himself from the benefits so that he doesn't have to pay for the proceeds on it? Well, that's the argument, and it'll be fought out in court, possibly. I give it, actually, I'm not a betting person, but if I would wager anything at all, I would say 20% chance that the Driver Inc. model will continue on as a feature in the Canadian economy. If it's the 80% where it's not going to be allowed, because there's 30 or 50,000 or more involved in it, there will be a negotiation, penalties, maybe even interest on that lost income tax and proceeds are not being paid. You don't have to pay for any of that. So there is actually a little bit of a disincentive to stop doing driver Inc. because they banded together and create such a huge political voice behind this one issue. There is now a completely different playing field potential for the Canadian employer-employee market, and it is going to be fascinating. There is one other thing that I wanted to talk about, the capacity of Canada Revenue Agency, and that is there are huge thefts, especially in goods and service tax, in the tens of millions of dollars. It is much better for Canada Revenue Agency auditors to be assigned to that issue than it is for them to put any kind of resources towards the Driver Inc. model. Okay, other than that, I hope this gives you something to think about as you're driving down the road. Have a good trip.
Thanks for stopping by Making Your Miles Count. For further Making Your Miles Count productions, call us at 877-987-9787 or download us at makingyourmilescount.com.